Right now, somewhere in your phone, there is a bank app you have not opened in 4 days because some quiet part of you already knows what the number is going to say, and you would rather not make it real yet. That flinch, that half second of avoiding your own balance, is not weakness. It is a scar. And by the end of this video, you are going to know exactly which 12 cuts put it there. None of them will look like a wound. They will look like a coffee, a 10% off today at checkout, a cable bill you have not read in 2 years, a protection plan for $6 extra. Nothing that ever felt like bleeding, which is exactly why it never stopped. Somebody designed every single one of these. Not to trick you once, but to be forgettable enough that you would let it happen again next month, and the month after, for years, without ever once adding it up. That is not an accident. That is the entire business model behind at least 4 things you paid for this week. I am about to hand you the calculator they were hoping you would never pick up. 12 habits. 12 real totals. And I promise you, at least one of them is going to make you put your phone down and just sit there for a second, doing the math on your own life. We start small. We end with the one nobody talks about. The one worth more than the other 11 combined, sitting quietly in a form you probably never finished filling out. Don't leave before that one. It is the most expensive sentence in this entire video. If you have ever opened a bank statement, flinched, and closed it again without reading past the total, this video was made for you. I'm Megan, and every week on this channel, we take the ordinary, everyday money habits nobody questions, and we run the actual numbers on them, out loud, so you don't have to. Here's the deal before we start. If even one of the 12 on this list makes you wince, and I promise you, at least one will, hit subscribe now, because that is exactly the kind of thing this channel exists to expose. Drop a like if you want more of these breakdowns, because it tells me you want the next one too. And I want something specific from you in the comments today. Tell me what country and what city you're watching from. I read every single one, and I want to see how far this reaches. Whether the same 12 habits show up in Lisbon and Lagos and Little Rock the same way they show up here. It cost you 5 seconds, and it means the world to this channel. One more thing before we dive in. Nothing you're about to hear is a judgment. I have personally defended at least 4 of these 12 with a straight face to people who loved me. This isn't about shame. It's about the fact that nobody ever sits down and shows you the real number. The one over 10 years, over 20 years, compounding quietly while you're living your actual life. So that's what we're doing today. 12 habits. 12 real numbers. And one at the end that might be the most expensive sentence in this entire video. Let's get into it. The average overdraft fee in the United States sits around $27 to $35 per incident, and roughly 11% of Americans pay at least one every year. That number climbs sharply for anyone under 30. Younger account holders are more than twice as likely to get hit as someone over 60. Here's the part that makes it sting. Some of the largest banks in the country collected over $1 billion each in overdraft revenue in a single year, according to federal filings. That is not a rounding error in their business model. That is the business model. Dana overdrew her account 4 times in 1 year, covering small things: a coffee, a subscription renewal, a gas fill-up, and paid $132 in fees to cover transactions that totaled less than $60. She never once thought of it as a $132 decision because it never arrived as one bill. It arrived as 4 invisible little taxes on being a few dollars short at the wrong moment. The fix costs nothing. Most major banks now offer free accounts with no overdraft fees at all, or low balance text alerts that buy you 24 hours to fix it before the charge posts. If your bank still charges you $35 for a $6 mistake, that is not a personal failing. That is a business decision they are hoping you never notice. In 2025, a record 57% of American drivers shopped for new auto insurance, the highest rate in 19 years of tracking, and the reason is almost embarrassingly simple. Insurers routinely raise prices on loyal, long-term customers faster than on new ones, betting correctly that most people will never check. Shopping around saves the average driver close to $400 a year, and yet most people who do shop only ever compare one or two companies before giving up. Marcus had been with the same insurer for 11 years and assumed loyalty had earned him the best rate available. When his sister finally talked him into getting 3 quotes, he was paying $460 more a year than an identical policy elsewhere. 11 years of that gap is over $5,000 for coverage that was, on paper, exactly the same. This one takes 15 minutes once a year. Set a calendar reminder for your renewal month, get 2 competing quotes, and let your current insurer either match it or lose you. They will not offer you the better rate. You have to ask for it. Store brands routinely run 25% to 40% cheaper than the name brand version sitting directly next to them on the same shelf, and in some categories, cereal, canned goods, dairy, the gap runs past 50%. Multiple blind taste tests, including national surveys, find most shoppers cannot reliably tell the difference. On an average household grocery bill, switching just the staples, milk, pasta, canned goods, cereal, to store brand can save somewhere between $500 and over $2,000 a year, depending on how much of the cart is currently name brand. Celine grew up believing the name brand pasta sauce was simply better because that is what her mother bought. She switched to the store brand during a tight month in 2023 out of necessity, fully expecting to switch back. 2 years later, she still buys it because nobody in her house noticed, including her. You do not have to switch everything. Pick the 5 items you buy every single week and try the store version once. If nobody complains, that is $500 a year. You just stopped paying for a label. The average American spends roughly $100 a year on bottled water. That number sounds harmless until you meet the households drinking it exclusively, several bottles a day, where the real total regularly runs past $600 to $1,000 a year, for a product where the tap water alternative costs a few cents a gallon. Franklin switched his family of 4 from a weekly bulk bottled water order to a simple countertop filter pitcher in 2024. He did it for the plastic, not the money. When he actually added up what the delivery service had been charging, it came to just over $900 the year before, for water. A filter pitcher costs under $40, and a replacement cartridge every couple of months costs less than $10. If taste is the real objection, a filter closes that gap almost entirely. If convenience is the real objection, a reusable bottle filled once a day closes it completely. The average American wedding now costs somewhere between $34,000 and $36,000. That is not the problem. Weddings are allowed to be expensive celebrations. The problem is how many people are financing that number on credit rather than saving for it. And research shows couples who finance their wedding pay an average of over $3,000 in interest on top of the bill, starting a marriage in debt for a single day. Colette and her fiancé put $14,000 of their wedding on 2 credit cards in 2024 to keep the date they wanted. 18 months later, between minimum payments and accruing interest, they had paid back nearly $16,500 and were still carrying a balance into their 2nd anniversary. None of this is an argument against celebrating. It's an argument for setting the number first, in cash you already have, and building the day around that figure instead of backfilling the number after the invoices arrive. Retail store credit cards, the ones offered at checkout with 10% off today, routinely carry interest rates well above 25%, some closer to 30%, compared to roughly 20% to 22% on an average general credit card. Deferred interest promotions are the sharpest version of this trap. If the balance is not paid in full by the deadline, interest is charged retroactively from the original purchase date, not just from the date you missed the deadline. Omar financed a $2,200 living room set through a store's 12 months no-interest plan in 2023, fully intending to pay it off in time. A late month pushed the final payment past the deadline by 3 weeks. The deferred interest was applied to the entire original balance from day one, adding $410 to a purchase he thought he had already handled responsibly. The 10% discount at checkout almost never outweighs the risk sitting behind it. if you can't pay a deferred interest balance in full before the exact date on the statement. A regular card, or simply waiting a month to buy the item outright, is the cheaper decision every time. A daily specialty coffee or latte in the $5 to $7 range, 5 days a week, comes to roughly $1,300 to $1,800 a year. This is the most joked about item in personal finance, and also one of the most real, because the joke usually stops the conversation before anyone actually runs the number for their own habit. Naomi did the math on her own order after seeing a version of this exact calculation online, half expecting to prove it wrong. Her daily $6.40 oat milk latte, 5 days a week, came to just over $1,660 for the year, more than she had budgeted for her entire annual vacation. This isn't a call to give up coffee. It's a call to actually check the number, because the gap between a treat and an unbudgeted $1,600 line item is usually just whether anyone ever added it up. Airline ancillary fees, checked bags, seat selection, early boarding now regularly add $100 to $250 to a single round-trip ticket that looked cheap when you clicked Buy. Frequent flyers who travel for work or family several times a year can lose $500 to over $1,000 annually to fees that were entirely avoidable with a different card, a different airline, or 5 extra minutes at booking. Harlan booked what looked like a $180 flight to visit his parents, and by the time he'd added a checked bag, a seat with legroom, and early boarding, the real price was $327, 82% more than the number he'd screenshotted to his sister. A travel credit card with a free checked bag, or simply packing light enough to avoid checking one, routinely erases most of this. The base fare was never the real price. It just displayed first the checkout offer to add protection to a $40 kitchen gadget or a $60 pair of headphones for an extra $6 to $10 is one of the highest margin products a retailer sells, precisely because claim rates on cheap items are extremely low, and most people simply lose or stop using the product before anything ever breaks. Priya said yes to protection plans on 3 small electronics purchases over 2 years: a blender, a set of earbuds, a phone case with a screen add-on, totaling $27 in extra fees. She never filed a single claim, and by the time anything might have broken, she'd already replaced 2 of the 3 items anyway, for unrelated reasons. For anything under roughly $75 to $100, the math almost never favors the plan. Save the instinct for genuinely expensive, failure-prone purchases, and self-insure everything else by simply setting the money aside instead. Cable, internet, and phone bills routinely start with an introductory rate and quietly jump 20% to 60% once the promotional period ends. And the jump rarely comes with a phone call. It arrives as one line on a bill people have trained themselves not to read closely. Ingrid, from the very beginning of this video, is a real pattern, not a hypothetical. A 12-month promo that expires without anyone renegotiating typically costs a household $200 to $500 a year in pure bill creep for a service whose actual cost to the provider never changed. 1 phone call a year. I'm considering switching. What can you do for my rate? Resolves this more often than not. Providers have entire retention departments built specifically to keep you from leaving. Make them do that job. Boutique fitness studios, cycling, boxing, Pilates reformer classes commonly charge $150 to $300 a month for unlimited or class pack access, well above a traditional gym membership, and industry data consistently shows unlimited plan members attend far less often than they expect to when they sign up. Yusuf signed up for an unlimited boxing studio membership at $189 a month in early 2025, motivated and consistent for 6 weeks. By month 4, he was averaging 1 class every 2 weeks, while still paying for unlimited access he wasn't using, over $2,200 for the year, for roughly 22 total visits. A class pack, rather than an unlimited plan, prices closer to what most people actually use. And if attendance has dropped below what you're paying for, downgrading isn't giving up. It's finally pricing the plan to match the person actually going. This is the one from the hook. Nearly every employer retirement plan with a match is functionally free money attached to a condition, usually a small percentage of your own paycheck contributed first, and a meaningful share of eligible workers still contribute below the level needed to capture the full match, which means they are actively leaving guaranteed, unearned money on the table every single pay period. Take a simple, common example. An employer matching 4% of salary on a $60,000 income is worth $2,400 a year, money that requires no investment skill, no market timing, nothing except contributing enough to trigger it. Skipped for 10 years, that is $24,000 in missed matching alone before a single dollar of growth is counted. Invested and left to compound over a 30-year career, that annual match alone can grow into six figures. Dimitri started his job at 24 and set his 401k contribution at 2%, 1 percentage point below what would have captured his full employer match, simply because he never read the plan document closely enough to notice the threshold. He found out at 31, 7 years in, after a coworker mentioned it in passing. Fixing it took him 10 minutes on the HR portal. The 7 years of missed match, invested at a conservative return, would have been worth roughly $19,000 by the time he made the correction, money that was never his employer's to keep, and that he had simply never claimed. Every other item on this list is about spending less. This one is about noticing money that was already yours, sitting there, waiting on a form you hadn't filled out correctly. So that's 12. The overdraft fees, the insurance loyalty tax, the name-brand groceries, the bottled water, the debt-financed wedding, the store financing trap, the daily latte, the airline fees, the checkout protection plans, the bill that quietly crept up, the boutique membership nobody's using, and the free money sitting in a form you never finished filling out. Go back to that bank app you haven't opened in 4 days. Open it now, whatever number is on that screen. Some percentage of it is not a reflection of who you are with money. It's a reflection of 12 small, forgettable decisions nobody ever asked you to add up. Tonight, you did. You don't need to fix all 12 this week. Pick the one that made you flinch. That's usually the one actually costing you something, and handle just that one. If all you do today is check whether your employer match is fully captured, this video just paid for itself 100 times over. Quietly, the same way the leaks did. If this changed how you're going to look at your next bank statement, subscribe, because that's exactly what this channel is built to do every week. And I want to hear from you. Tell me your country and city, and tell me honestly. Which of these 12 are you still paying for right now, and which one are you about to defend in the comments anyway? Tell me the one you already canceled and what it freed up. Tell me the one you're keeping on purpose. Some of you have genuinely good reasons, and I want to read every one of them. Somebody scrolling through these comments tonight is deciding whether it's worth it for them too. Your story is going to land harder than any number I gave you.